Namaste and good evening, ladies and gentlemen. My name is Sanjay Kapoor and I'm the General Manager, Performance Planning and Review Department of the bank. On behalf of the top management of SBI, I extend a warm welcome to all of you joining us today on SBI's Q3FY23 earnings conference call. On the call today, we have with us our Chairman, Mr. Dinesh Khara, Mr. C.S. Setty, Managing Director, International Banking and Global Markets and Technology, Mr. Swaminathan J., Managing Director, Corporate Banking and Subsidiaries, Mr. Ashwini Kumar Tiwari, Managing Director, Risk, Compliance and SARG, Mr. Alok Kumar Chaudhary, Managing Director, Retail Business and Operations, Mrs. Saloni Narayan, Deputy Managing Director, Finance. To carry forward the proceedings, I request the Chairman, sir, to give a brief summary of the bank's Q3 FY23 performance and the strategic initiatives undertaken. We shall thereafter straight away go to the question and answer session. However, before I hand over to the Chairman, sir, I would like to read out the Safe Harbor statement. Safe Harbor provision. Certain statements in these slides are forward-looking statements. These statements are based on management's current expectations and are subject to uncertainty and changes in circumstances. Actual outcome may differ materially from those included in these statements due to a variety of factors. Thank you. Now I would request Chairman, sir, to make his opening remarks.
Thank you. Thank you very much. Good evening, ladies and gentlemen. Thank you for joining this analyst meet post-announcement of the quarter 3 results of the financial 23. The Indian economy has exhibited a remarkable resilience through 2022 in the face of the deteriorating global situations triggered by Russia-Ukraine war, monetary policy tightening, and recurring waves of the pandemic. On the back of the strong financial and macroeconomic fundamentals, an important factor in the overall outcome has been the measured response of the monetary and fiscal policies, in sharp contrast to the aggressive tightening worldwide. The new year brings hope for continued momentum in India's growth story, backed by the sustained strength in domestic demand. The World Bank has gone on record to say that the nation was well placed to steer through any potential global headwinds in 2023. The IMF has also said that India remains a bright spot and would account for the significant portion of the global growth in 2023. Several high-frequency activity indicators like vehicle sales, petroleum consumption, railway passenger traffic, air traffic, RTO revenue collections, fertilizer sales have all shown improved YOY momentum in quarter 3 of financial 23. GST revenue also continues to remain robust with 15% higher revenue in quarter 3 compared to the same period last year. In financial 23, credit growth has continued to grow in double digits. The incremental 9-month credit growth has doubled in financial 23 compared to financial 22. Credit growth in the system is currently at 14.9% as against 9.2% in last year. The good thing is that credit growth is broad-based and not limited to a few industries or sectors. So we expect the pace to continue in the next financial year also, but some moderation can happen. At State Bank of India, we have always maintained that our long-term strategy is to build sufficient resilience in our balance sheet. So while we'll continue to pursue growth in core operating income, we have also been proactive in identifying any potential risk and build adequate provisions for the same. And our operating results for the quarter are aligned with our long-term strategy. I'm pleased to announce that for the second quarter in running, we have again posted our highest ever quarterly profit at rupees 14,205 crores. Our business growth numbers are strong, and in terms of asset quality, our gross NPAs have dropped to its lowest level in more than 6 years. Let me now give some color on the bank's number for this quarter. Net profit for the quarter increased by 68.47% YOY to rupees 14,205 crores, while operating profit at 25,219 crores increased by 36.16%. ROA at the bank for the 9 months period improved by 23 basis points on YOY basis, and it stands at 0.87%. And ROE improved by 458 basis points on YOY basis, and it is at 18.59%. Most other core profitability metrics have also improved over previous year as well as sequentially. Net interest income increased by 24.05% YOY on the back of improvement in yields and continuing credit offtake. Domestic NIM also improved by 29 basis points YOY and 14 basis points sequentially. Non-interest income grew by 32.21% to 2% YOY. Operating expenses increased by 16.69% as we have started building provision for the wage revision, which has fallen due from November 22. Other than that, our overhead expenses as well as staff costs are within control, and our cost to asset continues to remain among the lowest in the industry, reflecting our efforts to build a long-term cost efficiency. On the business front, the growth momentum in domestic credit offtake has continued in this quarter also, with growth coming from all segments. Domestic advances grew by 16.91% YOY, headlined by retail personal advances, which grew by 18.10% YOY, and corporate segment, which grew by 18.08% YOY. SME and agri advances also posted double-digit growth at 11.52% and 14.16% YOY, respectively. Our personal retail loan book, excluding housing segment, has crossed the milestone of 5 trillion. Domestic deposit grew by 8.86% YOY, driven by growth in savings bank deposits and term deposit. Our foreign offices have continued to perform well with good growth in advances as well as deposit. Coming to asset quality, we continue to post improving outcomes. Our gross NPA has dropped below 1 trillion and stands at rupees 98,347 crores. In terms of ratio, our GNPA has come down by 136 basis points on a YOY basis and stands at 3.14. Our net NPA ratio has also declined by 57 basis points and stands at 0.77. Slippage ratio for the quarter stands at 0.41%. Consistently improving asset quality is also reflected in our credit cost, which is at 21 basis points for the quarter and is down by 28 basis points on YOY basis. On the restructuring front, our total exposure under COVID Resolution Plan 1 and 2 stands at 26,035 crores as at the end of quarter 3 of financial year 23. The restructuring book has behaved well, with almost around 10% of the current exposure falling under SMA 1 and SMA 2. We are holding sufficient additional provision against the restructured account. The bank remains well capitalized, and we expect that our internal accruals will be adequate to take care of the normal business growth requirements. Our capital adequacy ratio, without adding profit for the 9 months, stands at 13.27%, and CET ratio at 9.26% are well above the regulatory requirements. Digital continues to be an important acquisition engine for the bank across assets as well as liability products. During the quarter, we have sourced 64% of the savings bank accounts and 41% of the retail asset accounts digitally through YONO. Our subsidiaries have also consistently performed well and continue to create significant value for all the stakeholders and, most importantly, for the customers. Most of our subsidiaries are leaders in their respective segments. We will continue to nurture these subsidiaries and see them creating value for their own shareholders and as well as the shareholders of SBI. Now, before I conclude, I thank you for your continuous support to the bank. We consider it a privilege to be able to contribute towards the growth of our economy. We remain committed to reward your trust in us with superior sustainable returns over the long term. I wish everyone here good health and very happy weekend. The floor is now open for your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Mahrukh Adajania from Nuvama. Please go ahead.
Hello, sir. Good evening. Hi. So, a couple of questions. Firstly, the write-offs are slightly higher this quarter, so if you could explain. And also on trading gains, the profit, the treasury bit, why does it look so high this quarter? So these are my first two questions, and then I have one more.
Yeah, write-off is in the normal course of business. That is nothing very unusual. I think it is about 10,000 crore is the write-off amount, and it is in the normal course of business. So nothing very unusual. And when it
it was 3,000 last quarter, right?
Yeah, I think normally we undertake write-off towards the third quarter and the fourth quarter. So that is why it is this kind of a trend is seen this year, and it was not there in the past.
And the treasury part.
Yeah, on the treasury part.
The treasury part, Mahrukh, is it also includes some amount of write back of the MTM provision, because the MTM requirement has come down, mark-to-market losses have come down. So that is getting reflected in the treasury.
Got it. So, sir, and in your exposure to a large group, in press, you've made some comments that it's 0.86% of total exposure. But what is the total exposure? Because we get to see only your gross advances. So, and your parcel...
0.88% of our loan book, which is 31 lakh crore and odd.
Okay. Got it. And this includes all the sanctions across all offices?
It's outstanding exposure across all offices.
Outstanding. Okay. So, but sir, you wouldn't talk about your sanctions?
I think as of now, what is material is that only.
Okay, but if we can get because like PNB disclosed their sanctions, right? So
it is their prerogative, and normally we don't entertain questions relating to a particular account because there's a customer privacy issues involved.
Okay, sir. Sir, if I can squeeze in just one last question, what do you think is the outlook on deposit growth and therefore margins? Right, you've done your operating performance has been phenomenal. Deposit growth is not great, but you don't even need it because you have been running the lowest CD ratio, amongst the lowest CD ratio in the industry on the domestic front. So what is the outlook on deposit growth and therefore margins from here on? When do you think margins sustain at the 3Q levels? Do they drop? When do they drop? How does deposit growth accelerate?
As of now, we are having excess SLR to the tune of about 3.2 trillion. And we are very mindful that I've said it in the past also, deposit is a franchise, and we always remain mindful of the depositors' interest. So in the buckets where we feel that we can attract the retail deposit, we are ensuring that we must be in line with the market trends, and that's the policy which we have adopted, and we'll continue to follow that. So based upon that, since you are also acknowledging the fact that we still have one of the lowest credit deposit ratio, depending upon the need, we will be calibrating our interest rates. But I would also like to mention that our about 74% of the loan book is linked to either EBLR or MCLR. And out of this 74%, I would say about 40% would be on account of MCLR. And if at all we increase the deposit interest rates, that will also give us elbow room for increasing the MCLR, and which will help us in ensuring that the NIM should not get adversely affected.
Okay, so more or less stable NIMs from here on.
I expect that, hopefully.
Okay, sir. Perfect. Thank you. Thanks a lot, sir.
Thank you. We have our next question from the line of Rahul Jain from Goldman Sachs. Please go ahead.
Thanks. Good evening, sir. Just a couple of questions. Number one, on the provisioning bit, we've seen a jump in standard asset provision in this quarter, and I think outstanding standard asset provisions are about 23,000 crores. So just wanted to understand why are we carrying such a large provisions here? Is there an element of contingency also that has been factored in here?
Yeah, there is one, of course, is when our loan book has grown, that has also led to an increase in provisioning because we are required to maintain standard provision for the standard assets also. Secondly, of course, we are always very mindful of if at all we get to see any kind of a stress on the ground in any of the accounts, we do make some provision which are floating in nature, and much of it will depend upon how the account, what is the trajectory of the account, and accordingly we crystallize those provisions. So partly it is on account of our increase in the loan book, and partly it is on account of our policy in terms of making the provisions proactively as against after the occurrence of the event.
But this translates into roughly about 75 to 80 basis points of the loan book. So fair to say 30 to 40 basis points may have been built just for any future contingencies?
Yeah, could be like that. Yeah. As I mentioned that if at all we get to have visibility of any kind of a stress in our loan account, we rather believe in making provision upfront.
I mean, it is across the sector.
It is across the sector.
It is a corporate.
Yeah, it is not the corporate book only.
And it is a standard asset provision.
Yeah.
Got it. Thanks. So just on this provision for employees of 5,429 crores in this quarter, so what is the element of one-off here, or this is going to be the recurring quarterly number?
No, we have a provision relating to our wage revision, which is about 996 crore is on account of that. And other than that are the provisions which have been made based on the actuarial assessment for our retirement liabilities, etc. So it is as per the
So and this is 996 crore. Would you be making this every quarter additional provisions?
On an average, about it is for every month it comes to about almost about 500 crore every month. That will be the provision which will be required to meet the liability relating to the wage revision.
Sorry, I missed out on the number. Can you please repeat?
Sorry?
Around 500?
No, about 996 crore is something which we have provided for, and this is a provision for 2 months' time. Okay? And apart from that, about 500 odd crores.
Yes, per month 500.
Every month 500.
No, every month 500 crore will be the provision for the wage revision, and apart from that, some provision we have made for on account of the pension and gratuity liabilities, which is essentially on account of the discount rate and also as per the recommendations of the actuary.
Got it. So just one more question. Again, going back to the exposure that is, of course, in the public discourse. Can we get some more color as to the exposure?
I think towards the end of this meet, after I complete all your answers, I will make some statements, comprehensive statement relating to the exposure to that particular group.
Sure, sir. I'll wait for that.
Yeah.
Thank you.
Thank you. We have our next question from the line of Ashok Ajmera from Ajcon Global. Please go ahead.
Compliments to you, Khara Saab, and the entire team. I think for the mind-blowing profit, I think one of the highest, operating profit in last maybe 4 or 5 years, even in the net profit. Even the asset quality has improved tremendously. Overall performance of the bank is so robust that even if there is any problem concerning to this large group, which may not be even in the top 15 group of yours as far as the exposure is concerned, I don't think the bank like State Bank of India will have any kind of problem when your operating profit itself is 26,000 crore per quarter. So having said that, sir, we will wait for your final comments on the total overall exposure to this group, fund-based, non-fund-based, bond, equity, foreign bonds, which you have assured that you will give the statement at the end of the question-answer session. Having said that, sir, I have some couple of data points and some information. We have gone slow in this quarter on the corporate credit. So, what is our basically ratio which will settle down if you take the whole FY23 by March, the composition between the RAM and the corporate?
I think it will be more or less where it is in the month of December.
Okay. So
it would be marginal movement for many of the segments, but it would be more or less on these lines only.
All right, sir. Sir, if we go on the income side, the other income has gone up to 11,467 crore from 8,874 crore in the last quarter, and I think the major part of it it come from treasury, the profit. So profit and sale and revaluation of the treasury is 2,937 crore as against 457 crore in the last quarter. Whether this trend is going to be continued in the coming quarter, January, March also, and how do we see now with the interest rate almost peaking up, maybe another 25 basis points, where do we stand on the treasury side, sir?
As far as the treasury side is concerned, there are two components. One, of course, is the improvement in yield on investment. And secondly, in this quarter, we have booked some MTM gain, which is about 2,200 odd crores, and which is more of a write back because if you recall, in the first quarter we had made a MTM loss provision, which was about 7,500 crores. So out of that, we had some MTM gain last quarter also, which we did not book, for the reason that we had seen the yield were somewhere it has again shooted. So that is the reason why we did not book at that stage. But now we have seen that yields are now coming within the range, and that's the reason why we have done this. So I think that is the major reason when it comes to the kind of movement you are observing in the treasury net results. The other item is we had some derivatives, which are again rupee dollar swaps, which we had done. So some loss component is there on those derivatives, so that is also booked in that particular head.
Sir, our credit cost and cost to income ratio both have improved tremendously. Do we see this trend to continue? Cost to income coming down and the credit cost both are to come down even at this low level?
I think for the quarter ending March 23, I can say for sure. And I think we will be in a position to give some guidance as we move further. Depending, it will also be the function of how the economy in general, macroeconomy will be moving. But nevertheless, as of now, it looks like that for the quarter ending March 23, we should have a similar kind of a credit cost.
My last question in this round, sir, is on PLI. How much provision on on PLI the bank has made for the 9 months? Because you have done this
provision would be in line with what the number is likely to be. The cost is likely. It would not be very significant amount, and it would be a very small number which is there. So it is, it is for the 5% increase, it is 5 days salary, and for 10% it will be 10 days salary. So it would not be a very significant component.
Okay, sir. But we have provided for. we already made the provision for it.
That's always there. No, we have so many pockets where we are keeping so much of provision. Non-NPA provision is as high as about 33,000 crore.
Yes, sir. I think the concern of the market is absolutely unfounded. But anyway, all the best to you. I think sooner or later the market will understand the economics of the bank and the financial. Thank you very much, and all the best to you, sir.
Thank you very much, Ashokji. Thank you.
Thank you. We have our next question from the line of Anand Dama from MK Global. Please go ahead.
Thank you, sir, for the opportunity, sir. We've heard about a lot of resolutions in the pipeline right now, like SKS Power and all. Do we have any resolution pipeline, particularly for the fourth quarter and over next 6 to 9 months that we can talk about?
So there are so many resolutions are in pipeline. That is. But when it will get crystallized, because it is always a process which is carried out in all these matters, and how much time will be taken at each of the step is actually at times is not very certain. So that is one of the reasons why saying it so much of certainty that in the last quarter we'll have so many resolutions coming through, it will not be in order for us. But nevertheless, I'll ask Mr. Tiwari if at all he can give some color in this direction.
So actually, sir, there are many cases which are at final stages, but we cannot be sure, sincerity in various legal proceedings, tough to give a timeline or a date. I'll give some high-level number.
High-level
what? I'll give you a high-level number going forward in the call.
Sure, sir. Thanks. That will be great. So secondly is the outlook on margins. I think this quarter also we have seen a meaningful margin uptick. We still have some room in terms of LDR improvement. And as you said that MCLR also would increase as basically the cost increases. So
I would suggest that let us keep, as far as the guidance part is concerned, I would like to keep the guidance at this level, and if at all there will be room for improvement, we'll certainly ensure that. Incidentally, in this NIM also, it could have been even better, but because in the last year we had the income tax refund, which was as high as about 2,400 crore. As against that, this year we have got income tax refund, which is just about 800 crore. Interest on income tax refund. So that is the other reason. It will have an impact about 6-7 basis points overall. But yes, of course, if at all we do apple-to-apple comparison, perhaps the impact, change can be even better. So this is just for information. Yeah.
Yeah, sure. I think that should also play out in the fourth quarter, right? Structurally.
Yeah, hopefully. Let's hope for the best.
Yeah. Okay, sir. Thanks a lot, sir.
Sure.
Thank you. We have our next question from the line of Abhishek Murarka from HSBC. Please go ahead.
Hi, sir. Good evening. Actually, just one request when you make your comment on the large conglomerate. If you could clarify whether this 27,000 crores includes loans, LC-BG, non-fund based, and overseas loans. So just at the cost of repetition, just requesting that. And also, if you could also clarify that if there's a refinance opportunity, given that, so then...
The second one.
The second one is if there's a refinance opportunity, given that your large exposure framework-wise, there is a lot of headroom and the group, like several projects appear to be credit-worthy, then would you do it? So just these two things, if you could cover in your comment, maybe now or later, whatever, that would be very useful.
I think second question I can answer you right now, that is if at all any refinance opportunity is always evaluated on merits. So for me to say that anything right now will not be in order, and as and when any such demand will come, we have not received any such demand or any such request. If at all any such request will come, it will be evaluated only on merit, and while evaluating, we are always very mindful in terms of the stake of the promoter or of the entrepreneur and the kind of risk which it is, and based on that very comprehensive assessment only, views are taken. It is not merely simply one request comes and we grant the facilities.
Understood. That's useful. And my second question is actually on your international loans. Now, sequentially, they've been flattish. I think a couple of quarters back, we were talking about being a little aggressive there and, looking for opportunities outside. What is the outlook there, sir? Next 1 year, are you looking to grow that maybe to, higher percentage of loans, or what's the strategy?
See, in terms of dollar, our international book has grown by about 9.15%. And though when it comes to RALU rate, when we convert it on the RALU rate, it looks like that it has grown at about 20% plus. But de facto, it is in terms of dollar, it is just about 9.15%. And now our focus is for improving the NIM as far as our international is concerned. So that is the reason you might have observed that our NIMs have improved significantly. We have moved towards 1.67 as far as our international NIMs are concerned, and it is on a quarter-on-quarter basis, an improvement of about 23-24 basis points. So that's how it is. And when it comes to the composition of the international book, it is essentially local lending and in those markets, which is not necessarily to the Indian corporates only. It is even to the local corporates, and we are participating in the local syndications. And also when it comes to India-linked loans, they are majorly ECBs, and they are ECBs to either AAA or AA rated entities only. And that's how this whole complexion is. Apart from that, the last component is the trade finance. Trade finance book, wherever we are getting the margins, we are participating on the platforms, and wherever we are in a position to get the margins, there we are actively involved.
Sure. So margins in the international book should hold up around current levels?
I hope that we should be in a position to maintain at this level, if not improve.
Perfect, sir. Thank you. And just one question I'll squeeze in on SME. Now, for several quarters, that book was not really growing, and this quarter there's about, I think, a 10% QOQ jump in that book. So if you could share just, what has changed? Is it a change in product geography, customer focus? What has really changed over there, and whether this is sustainable?
Yeah, we have, in SME, we have invested well in terms of structures, in terms of capacity building, and also in terms of focus. That is something which has been brought in for last about a year plus, and the results we are now in a position to see. Last quarter also we saw a decent growth in SMA book, and this quarter also we are seeing a decent growth in SMA book. And herein I would like to mention that we are having a focus on the distributor finance, vendor finance, balance sheet based lending, and also we have come out with another loan product which is essentially run through YONO, which is a pre-approved business loan where we are looking into the transactions and the current accounts, and based upon their transactions we are in a position to offer the loans to all such entities also, which are actually small in nature, but this is something which is becoming very popular. So these are some of the contributing factors, and we have grown SME by almost 443,000 crore on a year-on-year basis, and these are some of the contributing factors. It has become a continuous focus area, and also we are very mindful in terms of quality of our lending, and we have created a loan management system where we are having adequate visibility in terms of the unstructured information through the GST and etc. So that way we have significantly strengthened our underwriting practices in SME. We have invested in terms of manpower. We have invested in terms of product. So all that is showing up, and to my mind it is sustainable. We have set a target for reaching 4 trillion number by the year March 24, but the way things are, we should be very near to that by March 23.
Perfect, sir. Thank you for that excellent color, and all the best for future quarters. Thank you so much.
Thank you very much.
Thank you.
3,000.
We have our next question.
Just one sec. Mr. Tiwari has to contribute something.
So this question about how much recovery or resolution we can expect. So this is the past record plus the recovery already done, and subject to, of course, the court decision in few cases. We should have a number between 3,000 to 3,500 in quarter 4.
Thank you, sir. We have our next question from the line of Kunal Shah from Citigroup. Please go ahead.
Yeah, congratulations. Good set of numbers. So, firstly, just to touch upon in terms of the recoveries and upgrades. So, X of the resolution which you have highlighted, maybe the run rate which is there for this quarter of 1,700 odd crores, should that be the normalized one, or this is relatively on the lower side?
So actually, recoveries which you are seeing here, also we have to keep in mind that last year about 1,692 crore was on account of a particular account. It was one account. So if we ignore, if at all we have to do the apple-to-apple comparison, then perhaps our growth in recovery this quarter is as high as about 18 to 20%. So I think we expect that going forward we don't have chunky accounts which are awaiting resolution, and perhaps it might take little longer also. But nevertheless, I mean the kind of efforts which are being put in terms of OTS, in terms of NARCL, and those kind of things have helped us in sort of ensuring that recoveries happen faster. And we expect that we should be in a position to maintain this kind of a number at least in this quarter also.
Sure. So compared, like when we look at it, say in Q1, Q2, it was somewhere around 5,200 odd crores. Last whole year it was 21,000 crores in terms of recoveries plus upgrades, compared to maybe almost like 1,600 crores kind of a number for this quarter. So you are saying maybe X of the any resolutions, this can ideally be the run rate, even though focus is there in terms of improving it.
Actually, since you would have observed that the stock has come down quite a lot. Now it is. No, that's now less than 100,000 crores. So that itself will leave these are also the amount is also small in each of the cases. So each of the resolution when it comes to efforts, it takes almost the same amount of effort, but the recovery may not be as commensurate to the efforts. So that's why, number may look small, but in terms of the recovery, it will be a sustained effort. And normally we get to see some kind of a better recovery in the last quarter. We hope that there would be a marginal improvement over whatever we have done this quarter.
Sure. And secondly, in terms of the corporate exposure and say getting into infra, there is some rundown of almost 15,000 crores say in telecom and even in power. So is it more of a repayment of the account, or is it a refinancing at the lower rate by the competitor? What is actually leading to that? And what would be the overall outlook on the corporate credit growth?
The corporate credit growth, we have got proposals in pipeline as high as about 1.9 trillion. And where availment is yet to be taken both in term loan and working capital underutilization, that would be as high as about 1.10 trillion. So overall, about 3 trillion is the number in the corporate book, which we are having some possibility of converting into. At least the unutilized will certainly happen. One positive trend which I must mention is relating to the availment of the term loans, and the non-availment of term loan has come down quite a lot, and that is normally it augurs well, because generally after that the working capital improves. So I think with that kind of a scenario, I expect even working capital utilization will also improve. It has come down from about 56% to 54%, but we have also seen the increase in credit growth. Sanctioning has gone up by about 24% as far as the large corporate credit is concerned. So I think overall, I expect that we'll have a good visibility of the opportunities coming in here, and also the quality loan we should be in a position to exit.
Okay. And on telecom exposure and power, anything specific, particularly in this quarter? 15,000 crores of rundown in telecom.
This is actually year-on-year rundown. This slide number 10 carries the year-on-year reduction, and this is usual repayment as well as the reduced utilization in couple of accounts.
Okay, yeah. So compared to like September also it was almost 44,000 crores, and that's down to 20.
Some of the PSUs also there would be some repayment which would have come. That is bonds as well.
Okay, so these are the repayment. It's not like refinancing and maybe some kind of a rate competition and losing out to the company. Maybe.
No, not at all.
Thank you. We have our next question from the line of Jay Mundra from B&K Securities. Please go ahead.
Hi, sir. Good evening. Sir, last time you had given loan growth range of around 14 to 16%. For 23. This quarter, as you said, corporate growth, usually have some seasonal uptick in fourth quarter. And you mentioned a decent amount of pipeline which is there, which could be, disbursed. What would be your, outlook on the loan growth for the full year and for 23 and maybe beyond, if possible?
I think I expect that the loan growth should be somewhere in the range of 14 to 16%. I still maintain my expected indication which I had given last time also.
Okay. And sir, you had mentioned your excess SLR at rupees 3.2 trillion, and within which, sir, how much would be the scheduled redemption? Because that is what possibly will help you offset the deposit thing. What could be the scheduled redemption amount out of this?
The remaining period, the redemptions will not be much. For the current financial year, it will be just about 30,000. But we are also adding at the same time. You see, I think there are investments happening in the SGL and some of the GTEX also. I think broadly we expect that this excess SLR will remain at this level for some time.
Right. No, because sir, your loan to deposit ratio is now 73, right? While it is low relatively, but it is still.
If at all we put the IBG also, if at all we look at domestic, it would be somewhere around 66, 67 only. IBG funding is very different.
Yes.
For IBG funding, we run our international banking group more like a corporate bank, and there the loans are not necessarily funded from the deposits.
It's predominantly borrowing, market borrowing.
They are predominantly market borrowing clients, etc., etc.
Right. So speaking on overseas things, sir, this quarter the book has been flattish on QOQ basis. So how should, and you mentioned that the dollar term growth is only, or let's say around 9%. How should we look at the growth in overseas books, sir, specifically going ahead? Assuming in dollar terms, you may explain.
We are very mindful in terms of the NIM which you are generating there, and that is the reason it was a conscious effort. It is not that we are not having opportunities. Since we are trying to maintain the NIM, improve the NIM, that is the reason why we are at this level. And considering the economy which we are seeing across the globe, 9.15 in the international space is a decent number.
Right.
And today, this group is actually contributing 15% of our total balance, loan book of the bank.
Right. And sir, question on your agri loan growth, right? So your agri loan growth has been consistently lower than overall loan growth, right? In this quarter, this is like 11%, and overall loan growth is 18-19% or 18%. And as of FY22, we were PSL deficient. Now, so what are you thinking in terms of PSL compliance, especially on agri side? Because that growth has been very lackluster, whereas the overall growth has been reasonably strong.
There are, in fact, the way we started working on SME, we have already started working for agri also, and we are trying to actually work in terms of the realignment of the agri book, and that process is already on. Earlier we were into low value or small value working capital loans only. We have already done about 40% of this book has become agri gold loan, and the remaining book also we are looking at it. In fact, we are already working on it. High value agricultural loan as well as getting into the agri finance for the agri tax and agri infrastructure. So that is something which we are working on, and this is a result of that conscious effort which has been put in, and hopefully we will be in a position. We have set a target of 3 trillion for the financial year 24 for this book to reach, but we are quite hopeful that in this quarter also we will get to see a decent growth, and we are much on course as far as our internal target is concerned.
And also the supplement, sir, PSL is also is contributed by SME and some of the affordable homes.
Yeah.
So there are other contributors to the PSL, not only agri.
So if I can add,
yeah, please.
As far as agri PSL is concerned, it's not a challenge in terms of the agri mandate of 15%. It's not at all a challenge. We are compliant with that. And for some of the other, sub-segments where PSL is calculated, for that we have methods like buying PTC, PSL certificates. So that we'll do. But for agri front, there is not an issue. And to add to what the chairman said about agri, we are conscious about the quality of agri book which you create, because we have seen the agri NPA, which is the highest, 12.70%, the agri NPA percentage which you're seeing in the presentation. So the color and composition of agri book hasn't changed entirely as of now. It means creating new kinds of products. It also means targeted approach towards selecting customers, as well as use of analytics and technology. So all these things are it's getting turbocharged, so to say, in order to get a better quality, sustainable agri portfolio.
Thank you. We have our next question from the line of Adarsh Parak Rampuria from CLSA. Please go ahead.
Sir, the question was on the exposure, so I'll wait for your comment. Thank you.
Sorry? I missed out.
I said the question was on the exposure, so I'll wait for your comments. Thank you.
Okay.
Thank you. We have a next question from the line of Prakhar Agarwal from Elara Capital. Please go ahead.
Yeah, hi sir. Thanks for this opportunity. Just two things. One, data keeping. What is the SR outstanding on our book?
SRs have already been provided for. Whatever SRs were there, we have 100% provided for those SRs. It's about 7,000 odd crore is there.
Sure. So they were provided during this quarter, or they were already provided earlier?
I think last quarter. Last quarter. Last year itself we had provided for it.
Got it. So secondly, when I look at the margins, and you probably said that we'll be able to sustain the margin. So when I move into FY24, should there be a cognizance that we should be essentially be equal to average of what we have reported in FY23, because we have seen sequential uptake in FY23 at every quarter. So to that extent, if I were to average that out, despite the cost which will happen, we'll probably be maintaining a similar NIM in FY24. Is that a fair statement?
Our effort. That will be our effort.
Got it. And just last bit on this, your trading. So probably you said that around 2,200 crores of unwind that we have probably seen this quarter. Now in Q1 we had around 7,000 odd crores. So when do we expect the balance to get unwind? Over a period of 2-3 years, or how we should look at it?
No, we have already provided for that 7,500 crore. We had already provided for that, no?
No, so of that around 2,000 crores, you said that got written back this quarter.
Right.
So the balance
you are doing, which is the right back, which is it's MTM part only.
Got it, sir.
I mean, how the yield will move, it will be a function of that, no?
Sure, got it. That is it, sir, on my side. Thank you.
Thank you. We have our next question from the line of Manish Ostwal from Nirmal Bang. Please go ahead.
Yes, sir. Thank you for the opportunity. I have only one question on the short-term liquidity in the market. Interbank market has tightened recently, and because of that, the CD rate has also increased. So, how do you see the funding environment in the wholesale market, given the busy season, the Q4?
See, I think as we keep saying, our funding of the credit growth, we use various instruments. Deposit, of course, is the mainstay, and market borrowings is one. But our ability to borrow from the market at very competitive rates continues to be available to us. And in terms of the deposits, I think there would be some small uptick on the bulk deposit rates. And we, based on our requirement, we align to the market rates. I think broadly we were able to contain the cost of resources, if you see. I think we expect that in Q4 also that trend will continue.
The other thing which I would like to add here is what Mr. Shetty has mentioned. You would have observed that in the current financial year, we have already gone to market and raised infrastructure bonds, and at a very, very competitive rates. So I think that also is another source, and since we are having a reasonable portfolio of our infrastructure assets, that's the other source which is available and which actually becomes much more competitive in terms of cost.
20,000 we have raised.
So already 20,000 we have raised, and that is something that will be the strategy going forward also.
Okay, and one small point on the equity capital raise plan for the bank so any plan for that to raise the capital to support the growth?
We are as of now. I mean, once the profits will be plowed back after the March quarter, our rough estimation is that as far as the capital adequacy ratio is concerned, we'll be at about 14.5. And at 14.5, we have made some rough assessments, and it indicates that we can support the loan growth of at least 7 trillion. So we will be very closely evaluating the situation, and wherever required, whenever required, we'll certainly raise all kind of resources. Not only equity, we will also be looking at 81, 82, whatever is required to be done.
Thank you for the opportunity and all the best for the coming quarters.
Thank you. Thank you very much.
Thank you. We have our next question from the line of Manish Shukla from Axis Capital. Please go ahead.
Yeah, good evening and thank you for the opportunity. So when you said about wage revision, monthly run rate was about 500 crores, that assumes what?
Sorry?
that assumes what rate of wage inflation? 10%, 12%, 15%?
It's about 10%.
10%. Okay. Second question, sir, on the standard asset provision of 23,000 crores that you are carrying, roughly how much is it that you would think is additional or extra, and under what situation will you be dipping into it?
This provision which you are carrying, I would say roughly one is this additional provision for restructured standard accounts. This is essentially for the restructured book which you are carrying on the balance sheet. So that was, it is about 30% of our restructured book, which is about 24,000 crore. And the remaining one is 23,116 crore, which is for standard assets. As I mentioned, that part of it is on account of our standard assets as it is. And part of it is on account of the whatever visibility of stress we had on ground. So how long we'll carry, we normally take stock of the situation quarter-on-quarter basis, and based upon that we take a call.
May or may not realize.
It may or may not happen. It may or may not crystallize, but depending upon the situations which will be obtaining at the end of the quarter, we'll be taking the call.
And majorly it is the normal standard asset provision.
So majorly, predominantly it is for the standard assets only.
Sure, sir. And couple of times we mentioned that our LDR, at least domestic LDR, remains pretty low. But at the same time, during the quarter, borrowings have gone up by about 60,000 crores, and you also hinted at potentially raising more borrowings. I'm just wondering, given the excess SLR and low LDR, why would you consider raising money via debt borrowings?
This is more of a market operation, because we have to evaluate all the options and ensure that our cost of resources remains the lowest.
Okay. Last question, sir. In the budget, the finance minister has enhanced limit for certain small saving schemes and introduced a new scheme as well. Do you think that puts pressure on retail deposits for the system, either in terms of availability or rate?
Total size of that kind of a deposit is about 2 trillion. And when it comes to banking system deposits are somewhere around 150 trillion plus. So it might have some impact, but not as significant, which should be really, because we have seen in the past when it comes to special deposit schemes, they have been always carrying an interest rate which has been quite high as compared to bank deposits. But I don't think it could make a significant dent into the deposit base of the banking system. So that's how I look at it. And apart from that, when you keep deposit with the banking system, it is also liquidity is something which is available. When you keep deposit like that, the liquidity is not available. So it's more like a premium somebody is paying for keeping the illiquid asset. You understand it better. You are into the finance world.
Thank you. We will now have the address from the chairman. Please go ahead, sir.
Yeah, sure. As far as the exposure relating to a large conglomerate is concerned, we have seen over the last 5 to 6 years the share of exposure of the Indian public sector banks as a percentage of their total debt has consistently declined from 55% in 2016 to 31% by the end of 2022. During this period, the debt to EBITDA, which is a key monitorable, has been improving for the better, demonstrating the group's ability to complete and generate cash in a timely manner from projects which they undertake. As is known, most of the recent acquisitions have been financed through overseas borrowing and market instruments. Hence, we don't envisage any risk build-up to the Indian banks on this count. As far as we at SBI are concerned, our group exposure is well below the large exposure framework, and the loan outstanding exposure stands at 0.88% of our SBI's total loan book as on 31st of December 22. Majority of the SBI loan outstanding are towards operating assets and projects that have been completed and generating cash accruals. The projects that are under construction are on schedule as of now. The loan extended by SBI are secured by the project assets, and there is no facility granted on unsecured basis. The cash flows are routed through the designated accounts as per mechanisms are in place to ensure timely servicing of the dues, and there has been no record of any delay or default till date. We have not extended any finance against pledge of promoters' equity. Wherever shares have been pledged in favor of SBI in certain entities, they are in the nature of additional collateral security. Non-funded exposure of SBI is mostly towards letter of credit, bank guarantees, both performance and financial. Non-guarantees issued towards securing the other financial obligations are not there. No guarantees have been issued. There are no concerns on the group's ability to service the loan book at this point in time. We hope it clarifies. I hope it is. I have tried to address the majority of the concerns of all concerned.
Thank you. Ladies and gentlemen, due to paucity of time, I would now like to hand the conference over to Chairman, sir, for closing comments.
Thank you very much to all of you for taking out time and to be with us on this weekend evening. I take this opportunity to wish all of you the very best and have a great and enjoyable weekend. Thank you very much.
Thank you. On behalf of State Bank of India,